In this video, we're going to talk about one of the biggest hedges against inflation, commodities. Specifically, we're going to talk about two oil stocks in this video because inflation continues to run rampant. We got CPI data this morning at another 40-year high. So we're going to talk about two oil stocks in this video. So stick around. Hey guys, welcome back. I'm Richard Allen with TipRanks TV. Thank you so much for joining me for another video. We're going to talk about two mega oil stocks in this video because we keep getting hit harder and harder with inflation right now. And one of the best hedges against inflation is the commodities market, specifically oil, gold, things like that. So we're going to stick with oil today. We're going to talk about two of the big players in that space that will probably be around for a very long time and will probably continue to perform well under these market conditions. So the first company on the list is Exxon Mobil. Exxon Mobil is a $354 billion behemoth. It explores and produces oil and natural gas, as well as chemical products. It is headquartered in Irvine, Texas. Over the past year, shares of this integrated oil and gas company have surged 51.1%. In the fourth quarter of 2021, the company's earnings increased to $2.05 per share from the year-ago earnings of 3 cents per share. Revenues and other income increased 82.6% year over year. Costs grew 0.1% from the year-ago quarter, while expanding 14.1% sequentially. Going forward, Exxon is poised to benefit from its robust capacity in production and refining, technological expertise, as well as cash flows, efforts to exit non-strategic businesses, and synergies from acquisitions give ExxonMobil a bright future. Projects in Guyana, investments in lower emission solutions, and sound capital allocation policies add more vigor to this stock. Exxon's chairman and CEO Darren Woods said, "We've made great progress in 2021, and our forward plans position us to lead in cash flow and earnings growth, operating performance, and the energy transition." So let's take a deeper dive into Exxon Mobil, trading under the ticker symbol XOM. Exxon Mobil has a smart score of 7, with an average upside of 3.56% and is a moderate buy. Now, retail investors are very positive on this stock right now. News sentiment is bullish as well. But if we take a closer deep dive into both the hedge funds and insiders, it looks like they are decreasing their holdings over the past quarter. Let me know what you think about insiders and hedge funds lowering their positions in this stock. Do you think it's indicative of a downturn ahead in the oil market? Or do you think as inflation continues to run rampant, this stock will do well? Let me know what you think down in the comments. The second company on the list that we're going to talk about is another behemoth in the oil space. It is Chevron. Chevron is another integrated oil and gas company and has a market cap of $325 billion. Besides exploration and production of natural gas and oil, the company provides technology, insurance, cash management, and other services. Over the past year, shares of Chevron are up 62.7%. In the fourth quarter of 2021, Chevron's adjusted earnings were $2.56 per share, above the year-ago figure of 16 cents per share. Revenues and other income in the quarter expanded 90.6% year over year. Chevron is poised to benefit from growth projects like the Wellhead Pressure Management Project, as well as the Anchor Project. Chevron's shareholder-friendly policies, acquired assets, capital and exploratory expenses, and joint ventures are likely to be advantageous for investors. The company's chairman and CEO, Mike Wirth, said, "We're delivering greater value to stockholders today while working to meet the world's growing energy demands in a lower carbon future." So as we did with Exxon, let's take a deeper look into Chevron, trading under the ticker symbol CVX. Chevron has a smart score of 9, which is an outperform, but has an average downside over the next 12 months of 3.5% based on a moderate buy rating. Similarly to Exxon Mobil, you can see down on the bottom here, retail investors are very positive on the stock and news sentiment is bullish as well. However, a differing of opinion here for hedge funds. They are very bullish on Chevron, adding 9.7 million shares in the last quarter, but insiders are also selling shares as they are with Exxon. So let me know what you think about these two companies. Do you think the oil market right now, being as hot as it has been over the past year, is still a good hedge against inflation right now? Or is there an inevitable downturn ahead? I want to hear from you down in the comments. And if you have a favorite commodity space that you want us to talk about here on TipRanks, let me know down in the comments. Guys, thank you so much for joining me for another video. As always, like and subscribe, and I'll see you in the next one.